You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That rockin' bit of tunage means it is time to rock out yet again with the Option Block, coming at you live every Monday and Thursday, noon Central, 1 p.m. Eastern. You can get it live via the Mixler after the fact on your podcast device of choice. We don't judge. Just listen. Send in those questions, those comments. We do love to hear from you guys. If you like what you hear, you're more than welcome to leave a review on your platform of choice. We've been doing this for a long time, so we have a backlog of them, but it's always good to have new ones because it helps new people discover the show all the time. At the end of the day, we like new listeners coming in, joining the party, joining the conversation. And speaking of that conversation, let's see who I have with me today conversing about all things options. Let's spin the wheel. Let's start all the way out in the hinterlands, the dark, dark, far northeast, where it's barely settled territory anymore. You go all the way out to the end, right to the ocean there, where the clam pirates live, and you find the rock lobster, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program. How go the efforts in your territory to become a settled, recognized part of the U.S., sir?
It's still going okay. I actually know where the bar is where Maine seceded from Massachusetts when they chopped off Massachusetts. They tried to take over the whole state many moons ago, but we successfully separated ourselves from Massachusetts.
Any sane person gets the heck out of Massachusetts as fast as they can. Speaking of a born and raised nutmegger, we got no love for our neighbors to the north there. I'm teasing. I'm joking there. We love our Bostonians and everyone else who tunes in there. All right, let's keep on moving to a place that's far less controversial. They haven't seceded from anything as far as I know. It is St. Charles, Illinois, where we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the show. How goes the secession efforts out there in St. Charles, sir?
Mark, you gotta be careful. You said those comments a couple of weeks ago, or about a year ago, about dysentery. Now you're starting rumors of us seceding. I don't know. I mean, maybe from the state of Illinois, wouldn't mind seceding from them and have our own state, but seceding from the good old U.S. of A., not so much.
Yeah, getting the heck out of the government of Illinois and or Chicago. I can't really hold that against. I think sane heads wouldn't mind doing that. But do not put words in my mouth, sir. Never in my life did I say you guys had a problem with dysentery. It was rickets, sir. It was clearly rickets. Do not put words in my mouth, sir. All right, let's keep on rolling out. Once again, we go all the way out intergalactic to a planet that doesn't even exist anymore, Krypton, where we are joined once again by the last dad of Krypton himself, Mr. TREY JARRELL, holding down the Fidelity hot seat on the old program today. Mr. TREY, welcome back to the program, sir.
Yeah, glad to be back here. Of course, calling from sunny Florida, where there's usually no shortage of craziness out here. But been kind of an exciting week in markets. Lots of news, certainly keeping us busy, to say the least.
Well, let's get into some of that business then as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we break down what the heck is trading, and in spite of the business that Trey referred to, not a heck of a lot of it going on over there in the old markets today. You know, there was a lot of optimism in the middle of last week, not so much towards the end of the week, but that was for other reasons. But still, it seemed like there was optimism midweek for the potential for some sort of deal on Brexit. Of course, over the weekend, the parliamentary machinations of the UK got the better of them, and they had to punt once again on Brexit. So all the hope for a Brexit end to this Brexit madness that has been plaguing us for years, unfortunately, has to be delayed. The market not exactly minding that too much, so most of the major indices actually up on the day. Of course, we are back in earnings season yet again, so if you choose to pull your gaze away from such meaty macro items and look instead at some fun micro items, you have that luxury these days. Again, most of the major indices in the green today. S&P, not once again the Goldilocks, but a nice bullish Goldilocks, up about 0.6%. We got the Dow, the laggard, only up about 0.1%, and the Nasdaq leading the charge to the upside, up north of 0.75%, over 0.8 now. Gold and oil both taking a bit of a break on today's rally-ho mode, and our old friend VIX Cash as well, also kind of not really doing a heck of a lot, actually up a little bit from our last show, up about 1/4 of a handle, right around a 14.25 or so. Our old friend VVIX, a.k.a. the volatility of volatility, remember it spiked around 100, right around to that triple-digit level, floated around there for a while. Now it's back off. Now shy of the 90 handle at about an 89.5 coming into showtime. That puts it at about down 3 from our last show. VXX as well, the product you guys all love to hate and root to the downside. Also feeling a little bit more downside, down to shy of 20.8, so that puts it down about 1/2 of a handle from last show. And let's look really quickly here, going around the horn here for what was lighting up the indices here coming into showtime, and a whole heck of a lot of really nothing. We had VIX itself struggling, hasn't even broken 100,000 contracts yet, about 75,000 around the tape coming into showtime. That's at an ADV, which has already been taking a hit of late. Remember, it got up north of 700,000 not too long ago. Now it's about 437,000, so pretty light out there in VIX land these days. SPY, not even at 1 million, at about 820,000 contracts coming into showtime. The ADV over 3 million out there. SPX at about 400,000, a little bit north of that. The ADV almost 1.5 million, so not even a third of their ADV there. The Q's at about 170,000. The ADV is a little bit shy of 700,000 out there. So you're getting the picture out there, listeners. And IWM, aka the Russell, at about 206,000 contracts with the ADV north of almost 450,000. So most of the major indices having trouble finding the groove out here today. Let's start in the land of Fidelity. Mr. Trey, what are the Fidelity folks doing to find their groove today, sir?
Yeah, they are certainly keeping busy here as always. Number one today, and this one was up here Friday as well. Probably no surprise with some of the price action we've seen, was Boeing, who's got themselves back in the news again here today. Trading today at $331, down about $12.68 right now. Keep in mind Thursday, the stock had closed right about this 370 level, and then some news came out Friday morning, just some concerns with the FAA. Maybe being misled about some of the safety features here on the 737 MAX. Really causing a big sell-off here Friday, right? It closed right around that 345 point here, just below that on Friday. So big downward move on Friday, from that chart standpoint, pushing it below the 250-day moving averages here. So, Fidelity customers kind of taking the contrarian view on Boeing, even with the big sell-off, maybe taking it as an opportunity to buy. I've got just over 3,000 buy orders here on Boeing today versus 1,000 sell orders. So it's about 75% on the buy side here on this kind of negative news. And thought this point on the chart where we're at here today was fairly interesting. These are right near our lows here from back in May. Was right around this level here in August after that previous earnings announcement before bouncing back above it. So certainly kind of an interesting one here. It's kind of been in this sideways range, wide sideways range of about 320 to 390, here since, around March or so after that a big initial sell-off. But, from the option market too, pretty substantial volume today. This names usually does about 83,000 90-day average volume, but today just under 140,000 here right now. So pretty significant options activity. And, most of that coming on the put side here, or at least leaning towards that way, about 78,000 puts to 61,000 here right now, with being put spot on the ask being the higher driver of those as well. So, perhaps some traders coming in either taking an opportunity to put some additional hedges on or playing that additional bearishness here as well. But kind of interesting. We'll keep an eye on it. It does look like it, has bounced up a little bit from the lows here today. So whether or not it bases here like it did the last couple of times will be kind of an interesting thing to pay attention to, going forward here. They do have earnings here Wednesday, so we'll be keeping an eye on that announcement. Also popping up here, and one that's, I guess maybe the theme today is our large cap or mega caps. It seems to be where the interest is, here. Next one on our list today was Apple here, and stock that's certainly been performing very well, and today hitting all-time highs here again at $240.73 right now, up $4.32. So, really been in this nice sustained upward trend since the market lows of December. Had a little bit pullback after the May earnings, but since then, it's been very steady up above that level here. Fidelity customers pretty split on Apple here today, about 50-50 exactly right now between buys or sells. So certainly some taking advantage of the all-time highs to get out. Others maybe looking to thinking that might continue that upward trend. But option volume today, wow, 430,000 contracts here so far today, with about 270,000 of those on the call side. With call buyers sort of leading the charge. So certainly a little bit of love on the call side from Apple here today in the option market. They don't have earnings until next week, but certainly been moving pretty steadily since then. Two other ones that popped up here today. We had on the list Microsoft coming up. They've got earnings this week as well on Wednesday. Fidelity customers on the buy side right now, about 60% buys to 33% sells. Chart's been very interesting here on Microsoft the last 4 months or so. It's basically had this really strong uptrend into that point here in June, and since then basically just sideways between about 135 and 142 range, just steadily back and forth here. Sitting right now, still in the middle of that range, right at the 50-day moving average. So it'll be interesting to see what where earnings does, right? If it's enough to kind of propel it out of this range. Last earnings failed to do so, pushed it to a high, but immediately pulled right back here on that one. Option market here today in Microsoft, also a little heavy on the call. 38,000 puts here, and call sellers actually leading the way, so maybe liking some of this sideways activity on it, trying to bring in a little bit of a premium perhaps here on Microsoft. So last one that I wanted to mention here, another one that's been in the news a lot and not positive news here, which is Johnson & Johnson. So they kind of popped up on the list on Friday here as well. Fidelity customers here leaning a little bit towards the buy side here, about 68% buys to 32% sells. But the stock right now just up on the day, trading at $128.12. It's up 40 cents. Friday, right? Big sell-off, here, right? That closed Thursday right around this 136 range, and sold off pretty substantially. And that was on some negative news here regarding a recall on baby powder. The stock had earnings report last week, and it was an interesting report. The stock had been pushing up against the 200-day average. The earnings reaction, right, initially positive, had a couple of substantial moves to the upside. So it was beginning to look like it might be a breakout on that moving average, but that recall announcement's really pushed it down here as well. And this level that it's sitting at right now, very interesting. Throughout the last few months, right, every has kind of been in this range, hitting this 126, 127 low. Started here back in July, again in August, tested this level again in September. Each time did manage to hold and rebound off of that. So we'll be paying attention to this level here today. Doesn't manage to hold again this time or ultimately break down. Not too big here in the options market here today. A little bit higher than usual. It only does about 33,000 90-day average volume with about 38,000 today. So a little bit higher with a couple hours left to go. Really the call sellers were kind of leading the charge here with this one. About 7,000 calls sold on the bid today, with slightly higher calls overall than puts here today. So thought that was an interesting one. Big company, been in the news a lot here today. Would have been a very interesting watch on Friday. Had a lot of activity, but following through today here. But those were some of the names today. I know a lot of big companies here the Fidelity customers were looking at, but that's what's been on the radar here.
Thank you for that. Last dad of Krypton. Let's go out now to a more quiet, a more tranquil Hamlet and see what's lighting up his tape. Uncle Mike, sir, what is on your radar in today's relatively quiet day, sir?
Well, I think that it's kind of a neat thing to see in the fact that we're in earnings season as we are right now, with the S&P right at this 3,000 level. I think that if we do go much higher or lower, we'll do it for good reason, whether earnings are going to be good or bad overall. So I think today is going to be a pretty exciting day in the afternoon, as well as this coming week, because of the fact that we're roughly 20 some odd points away from all-time highs in the SPX. So that's definitely something that's on my radar at this stage. I think Apple's continuing to move like we were talking about. And the other thing that I think is going to play a unique role in this is that it seems like the macro news in terms of deals with China, impeachment, things like that is kind of quiet. And so sometimes when things are quiet along one front, they might get loud really quickly. So there's a lot of things that could be brewing for a perfect storm, either to the upside or to the downside, over the course of the next few weeks between earnings, China, impeachment, scandals with Biden, or whatever it could be that could make some serious market news. Combine that we have non-farm coming out in a couple of weeks, as we always do at the beginning of the month. We have a lot going on. In terms of some things that are lighting up my tape at this time, it is quiet in terms of if you're looking at the Dow only being up roughly 18, 19 points is what I'm showing right now. But there are some names that I do follow that are definitely moving. Of course, Apple's up over $4 on the day. Facebook's up over $3 on the day. And then financials, the XLF, is up over 1% on the day. So there are some things that are moving for sure, just not necessarily from a broad standpoint if you're looking at the Dow. The S&P itself, the SPX, is up roughly 0.5% on the day. So we are getting a little bit of movement for all the VIX crazies out there in the pit or wherever they may be. VIX is relatively flat. So there is movement out there. You just got to look a little bit deeper for it today. So a lot going on, and very excited about the upcoming weeks. This is going to be a fun market, folks.
Oh, Uncle Mike's excited. That means you should buckle in, listeners. Might be some fun things afoot. And last but not least, he's very rarely excited. Let's see if we got him in an excitable mood. Mr. Rock Lobster, sir, what is on your radar in today's activity?
I actually posted a picture on Skype for you of a cricket just for fun. So you would have that little extra special thing.
Is that one of yours? Oh, yes, you're right. That is one of yours. Aha. What is going on there? You're besieged by crickets, sir.
You know what? I think it's some sort of biblical thing going on. What is so interesting? I would say, what is moving? There's so many currents. I don't think we heard anything about trade deal at all this weekend. We heard the usual raft of politics. It doesn't. Either way, my signal is always the market's going up, so people can't be too unhappy. And VIX, I think they pumped the vol into the weekend, and usually we would have a markup on Friday, but they really didn't take the vol down on Friday. So anyway, what happened was, since the vol stayed elevated into the weekend, there was no reason for them to take it down on Monday, which is today, which is why VIX is relatively flat on the day when normally you expect a bit of a markup. That's because the liquidity providers play games with the weekend, just trying to decay it when they can. But we're back above 3,000 in SPX, and this Brexit thing, it's amazing how politicians can find ways not to do things. I think they spend most of their time trying to avoid making a decision. If I'm paraphrasing Huey Long there, never speak what you can say with a whisper, or something like that. I don't know. Anyway, I got to remember the quote, but basically, it's just politicians just basically don't do anything. So the English politicians are trying to kick the can as much as they can. Much like probably ours will, or when they have to kick the can, I'm sure they will, like the deficit and all kinds of other stuff. But VIX at a 14 and SPX at 13 handle. So I would just say normally vol should be a little lower. I am noticing larger credits for certain option positions that with SPX at this level, I wouldn't expect the vol to be this high. So it's still like, I think the market is fine. We're rallying, but they are not totally buying the current level of SPX. That would be my take on this.
I was looking up some good Huey Long quotes for you, sir, but I don't see the one. I see about him he wants to dynamite his enemies, so that's a good one. But he was a colorful character, as always. But I don't see the one about whispering. Say with
a whisper what you can say with a wink, There
we go.
He was the ultimate.
Or in his case, just dynamite. He used to say, I used to get things done by saying please. Now I dynamite him out of my path. So there you go. A man of many subtleties, Huey Long. Probably why his comeuppance came the way it did. Speaking of what's coming our way, let's see what the market has coming our way in terms of the most active individual equity options out there today. Let's see. Only 95,000 gets you into the top 10 most active today. That's going to be at Tesla. Number 10, 95K. Also, kind of a tie for the bottom of the list here with Roku. Also at that 95K level. Number 8, Facebook. 111,000. Number 7, Snap, $1.20 on the tape. Number 6, good old Softy, $1.24 on the tape there. Again, number 5, Boeing, our old friends Boeing. Both Boeing and Bank of America on this list, which isn't confusing at all. Boeing, 139,000. I'll have to sneak over after the show across the street there to Boeing HQ and have a nice little lunch in their cafeteria and see if I can overhear any whispers of scandal and skullduggery going on over there. We have seen the large SUVs pulling in and out, the black SUVs. Things are afoot over there across the street at Boeing HQ. Boeing at 139,000 for number 5 on our list. Number 4, Netflix, 181,000. Number 3, Bank of America, 194,000. Number 2, good old AMD, 226. And once again, quiet day be damned, Apple just lighting it up out there today from a volume perspective, doing 429,000 contracts on a day when you could pretty much, not quite, you could almost add up a good chunk of the rest of the top 10, and you wouldn't really quite get to those levels. Apple up 4.25% or nearly 2% today, 240 and change. Crazy times, despite the fact they have senators and congressmen sending them letters that they have to address the issues with Hong Kong and everything else, all of this, Apple just shrugs it off as it continues its historic rally out there. The largest market cap name in the world continues to get bigger here as we keep on rolling. Yeah, let's keep on rolling. We got earnings. We can talk about those in a little bit out here in the Around the Block. Right now, though, let's keep on rolling. Let's go into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, let's get weird. Let's get funky. Let's get wild. Yep, it's time for the Odd Block. On a relatively quiet day, our scanners are popping off on a few interesting names. Seems like a few names are coming across everybody's radar today. In addition to us, our friends over there at Orax, who do all of our earnings move reports, they've also taken our lead looking into some of the unusual activity side of the realm and most actives. And one of their names they note is also on our radar today as well, talking about our old friend C Limited, ticker symbol SC. We talked about these before. This is a weird one. This is a Asian-focused esports and gaming and e-commerce name based out of Singapore. Also goes by Garena, the company name. So a lot of confusing names going on over there. This one's lighting it up today from a volume perspective. Orats has it at almost 31,000 contracts traded versus the normal of just 11,000. The calls to puts, it's all puts all the time. So they have their volume quite a bit more, almost 3 times what their normal volume is out there. Let's look back at the year and see what the heck's been going on. It's been a crazy year here for C Limited, SCA listeners. A year ago was trading about $12, 12 and a half, so pretty much roughly half of where it is right now. And it had a nice pop here in February. It went from about 15 up to about 24. Then it kind of vacillated around there for a while and gapped up to 31 again there in May. Then by the time of, looks like July or so, hit its peak for the year, which was at about 38. And then it's kind of slowly ebbed off that ever since with some fits and starts here or there. Right now, 27 and a quarter. That puts it up about a quarter today. So obviously not quite at the lows, not quite at the highs. It's kind of at the upper middle of that 52-week range. Got down to as low as 10.5 on the downside and 38 on the upside. But something's lighting it up out there, like we mentioned today, listeners. Let's see what our eye of Sauron found for us. Looks like, Mr. Rock Lobster, it looks like it's your old friend, the line in the sand, and done for some aggressive size. Huge block of 27,432 of the Nove 24 puts went up for 30.1 cents. The market at the time was about 25 cents at 45, so pretty close to the bid there. This was opening pretty clearly over there on the ARCA. There are earnings in November. The earnings are the 19th, which is an interesting date. Let's see here if that actually falls beyond the scope of the Nove options. So that's a couple days after expiration. So it's no earnings juice in this one, which is kind of interesting. So a little bit of a pre-earnings line in the sand, which is not a big trade we see a lot of. Usually people try to invoke that earnings premium in some way, shape, or form. But remember, we said the ADV is 11,000. This trade's nearly 30,000 contracts. In fact, pretty much a couple thousand more traded total, nearly 30,000 of these puts. So that puts pretty much all of the volume. I think at the time of coming to Showtime, only 500 calls had traded. Everything else was pretty much going up on this one strike. So Mr. Rock Lobster, looks like we got a pretty aggressive, pretty sizable line in the sand here in C Limited. Someone seems like they're not afraid to perhaps buy some if we drift a little bit south here again. Is that your take here? And also, interestingly, what do you think of him writing it in a contract that's pretty near term, that's close to the earnings, but not quite through it? I know you're not a fan of trading through the earnings. How does this approach fall on your radar, sir?
Well, doesn't this look kind of like a juicy put?
Yes, it is quite juicy. I was thinking the same thing.
Like 30, that's 1% till November for, an out of the money put. I mean, on the face of it, it looks like a good sale if you want to own the stock, because you're getting 1% till November. So if you want to be a long holder, it's an easy way to get into it. But I am, it is a I guess I should say bold, but I almost is like somebody's thinking they're going to announce before the actual date. The way that the vol is kind of bid in here, I find it interesting to say the least. And maybe they're just they're just jumping on the bandwagon to try to get the vol they can for the sale, but. It does appear like to be a line in the sand put, and they're just taking advantage of the higher vol and saying, "What the heck? We're jumping in with both feet."
Yeah, this is both feet and your head and your left arm and your right arm and your butt, because this is decent size. You're wearing this one. You're not getting out of this one before expiration at this point. This is kind of an all-in type of trade. I mean, you're doing 3x the ADV. You're doing some size here. So yeah, this is an interesting one. I tell you what, we're going to put this one. This one intrigues me. So we shall return to this one. I shall put this in our to be watched category, Mr. Rock Lobster. Starting to fill up. We're going to have to do several to be watched review shows to catch up on all the names we've been highlighting of late. But yet another goes into that very mysterious category. Let's see if our next one here can keep up. This one next up on our radar, our Eye of Sauron, is Johnson Controls International, everyone's favorite name. This is an Irish multinational conglomerate. There you go. That tells you all you need to know. This one, ticker symbol JCI, trading today 42.64, up about $0.75, nearly 2%. This is the name that a year ago was trading about 32 and change, dipped down in the market's nadir there Christmas Eve to about 28.5. Then it kind of surged north. By May of the next year, it was pressing 40 again, hit its 52-week high of around 44 and change back in September. So a little over a month ago, and then it's kind of settled off that around to 42 and change right now. So pretty much at the upper end of its 52-week range. Let's see what our Eye of Sauron found for us today, Mr. Rock Lobster. Jan looks like Jan upside call love to the tune of the Jan 45s, going up 10,202 times for 72 cents. That's a penny off of the offer there, listeners. This is opening over there on the Philly. Unlike our last friend, there are going to be earnings between now and January to the tune of November 7th. We've got some earnings going on up there. So, Mr. Rock Lobster, we got some upside love. This guy's he's expecting a nice move here because he's pretty much loading up on calls at the 52-week high level and expecting them to roar back up to that level and beyond, indeed, by Jan expiration. He's got a little bit of time, not a ton, but he's got a little bit of time. He's also got an earnings cycle baked in there, so that could potentially help him, or that could potentially drag him down even further. This is, I guess I would term this kind of old school odd block paper, kind of swinging for the fences, upside, near-term call love in a name with some earnings baked in. What do you think of this one, Mr. Rock Lobster?
Yeah, definitely. I don't think the price is that bad. But this, to me, also, I think this is the time you start seeing this stuff. They buy the Jan, looking for the kind of the Santa Claus rally, all that kind of stuff. And it is I think there are other bulls out there like TOSAW. I don't know if he would buy this out of the money call. But it's definitely they are looking for some upside. And I think, buying calls, you're going to be an investor. Generally, longer term is better. I think a lot more of the volatility, the ranges and averages, it's basically like standard deviation and stuff. They're actually much more favorable long term than short term, I think, especially when volatility is relatively low on the options. So I think this actually it's a decent shot. I mean, they're not paying a whole lot more than the move today. So I think a very reasonably priced long call purchase.
Mr. Uncle Mike, you have been invoked, sir, so I will give you an opportunity to defend yourself. Would you or would you not buy this out-of-the-money Jan call here in Johnson Controls International, Inc.?
I'd have to say I'd probably decline on that one. Typically, unless I'm feeling really bullish on something, or I've been doing really. Let me say this: if I was in Johnson Controls Inc., I was having a good run with it, and I felt it could have continued upside. Which, full disclosure, I'm not in the stock at all, know nothing about it. But if I felt it was having a good run, and I wanted to continue to collect more upside, but wanted to take a lot off the table, then yes, I think that's a time to buy out of the money calls, and you take a lot of your money off the table. But in this case, it's a stock with which I know nothing, so I will buy nothing.
You know, you know nothing about multinational Irish conglomerates, sir. How dare you? It's the name I check every morning. I have my coffee and check my C Limited, of course, and my Johnson's Controls. These are big names everybody loves. We're not going to put that one, I don't think, in the to be watched category. Maybe if some listeners protest. Our to be watched category overfloweth as it is. All right, and let's see. Last up here, a lot of funky names on the odd block, which is kind of the name of the game, right? We call it the odd block for a reason. All right, next up here, we got Smart Sheet Inc. This is, you want the description? It's a software company. There you go. That's all they say, software company. So that tells you all about what they do there. Ticker symbol SMAR, S-M-A-R. Trading today, $37.75, up about 85 cents, a little over 2%. This is the name that's also had a pretty decent year. A year ago, it was trading 24 and a quarter. It gapped up to about 45 back in March. And then it rallied some more, all the way up to 55 and change back in July. Kind of hung out of that level for a little bit, then it sold off again. By September, it was trading 39 again and change, and now it's right around 37 and change. So had a nice rally, gave up a decent chunk of that, and right now kind of hovering, looks like in the middle of that 52-week range. Let's see what our Eye of Sauron found for us out here today. These are, looks like puts, Nove 30 puts going up. Looks like splits, 13.5 cents. Sometimes you see these funky prints, listeners. The market was a dime at 25 cents, so going up, I think it's fair to say, on the bid there. 4,940 times for this block, at least. It is worth noting there are earnings, but they're after this. Earnings are on December 3rd, so not in, once again, someone drawing, looks like a line in the sand, Mr. Rock Lobster, in November, but doing so right outside the window of earnings, so not getting that earnings juice. This name, $30. It's decently high. It's off of $10 above the 52-week low, but also, you know, it's a decent level compared to where we are right now as well. So, Mr. Rock Lobster, take us home. What are your thoughts on someone else drawing yet another line in the sand, this time in Smart Sheet Class A puts?
Well, first, I like your acronym, LITS, line in the sand puts.
I'm pretty clever. What can I say?
I wonder if they're going to list that. The SIBO, it's a new product for the SIBO. They're going to list, instead of we got leaps, now they're going to list LITs. Just, you know,
I hope they do.
Green light.
I hope they do, because then my lawyers can contact them, and it'll be a nice hefty payday for all involved.
A real the option insider conglomerate grows even larger and more. The spider, the octopus, grows in the options industry. So what are these guys do? Make smart sheets? What do they make more? Make more spreadsheets?
They are a software company. That is exactly what it says. A software company.
Yes, a software company.
That explains it all, sir. Ask no more questions.
Yeah, this is line in the sandy, not great yield for the put. So I just figure, you know, when I see something like this, usually it's like a holder or somebody long. It just feels like adding some more pocket change for the week or the weekend, selling these puts. So, but I would say a bold sale for the 13 cents. It's, of course, under my rule. I don't like selling anything for less than a quarter. So they're obviously ignoring my rule, but again, not a lot of yield for the margin that you got to tie up for a month, or what are we? We're down like 3.5 weeks right now at expiration, or 4 weeks. So not my favorite sale, but probably one that will do okay. Just not a lot of yield, not a lot of meat on the bone.
Not a lot of meat on the bone. You know, let's add a fun extra wrinkle before we wrap up the odd block. A new wrinkle I just thought of. It's gonna be called the gun to your head moment of the episode. Gun to your head, Mr. Rock Lobster. You got to do one of these. We got to hold your nose and do one of these trades. I think I know which one it would be, but which one of these three would pass muster, sir?
Oh, would not pass muster?
No, would. That's the trade you would do with a gun to your head, sir.
I like the Johnson Controls one the best, just looking at all of them overall.
Really? I thought you'd say the puts. I thought you'd say the SC puts, the C Limited puts.
Yeah.
Decent premium for a month. There's a question marks out there, but there's question marks with all of them.
Yeah. That one is still, I have to say, I feel like they're going to change the earnings date on that one. That one has me a little sketched out. I mean, if I have a trend, the trend right now is still kind of uppish, especially for that stock. So I would rather ride that one. Looks like a little bit better money for me. So we could mark that in 2 weeks, and we could go on the gun to your head trade. Let's see if the Rock Lobster, how his intuition fared. You could test me and quiz me and berate me in the future.
Interesting. For the man who's writing the forthcoming book, Get Your Juice for Free, going out on a limb and buying some premium. Interesting stuff, listeners. As we keep on rolling, let's get even more interesting. It is Monday. It means it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, listeners, it's Monday. It's time for Uncle Mike to hold court on some various options, technique, or educational topic or strategy. And Uncle Mike, these are types of markets. Things are moving around. Things are rocking and rolling. Sometimes people want to put on a trade. Could be a spread. Could be some other types of strategies. But maybe they don't. Maybe they don't want to do it all at once. Sometimes I like a good inertial trade. Where you start it off a little bit, and then it starts working your way, and you increase the ratio, you increase the leverage of whatever it is you're doing as the underlying moves your way. So, Uncle Mike, if folks are intrigued by such approaches, sir, what do you have in store for them today on the old block of strategery?
Oh, it's the magic of scaling in and scaling out. So what I want to go through today is, let's say that you're in XYZ stock, for example, and things have gone your way, but you're looking at these markets right now and you're thinking, hey, we're right at the all-time highs, and it seems like we're having a hard time getting through this 3,000 mark in the SPX and staying through it. We've been fighting this number for an eternity, it feels like. But I like the stock. I'm not looking to sell my stock. I don't want to take any capital gains on it. And over the long haul, I think it's a good stock. So maybe should I write some calls on it? But then, you know what? I don't want to write any calls right at the top. But on the flip side, I like the idea of getting some premium and taking something off the table. Well, what could I do? Well, in the covered call world, let's say that you've already gone through the idea of doing the call spread that I seem to have talked about 6 million times in the show over the last year or so. But another way with which to think about it is that you could actually write a covered call on half your position. So, for example, let's just keep it real simple for right now. Let's say that you own 200 shares of XYZ stock. You could write a call, whether it's in the money, at the money, or out of the money, on 100 of the shares. So that way you know that if the stock kind of sits there and does nothing, you at least got some premium for it. But if the stock does go up significantly, you at least got to be part of half of it. And if the stock goes down, well, of course, the premium is yours to keep no matter what, but the obligation stays until the day of expiration. So that's one way with which to do it. Now, if you want to get a little bit deeper into scaling, let's say you own 1,000 shares or 900 shares, let's say. Let's say you could maybe do nothing on 300 shares and then 300 sell an out-of-the-money call and then another 300 sell an at-the-money call. There's a lot of things with which you could do with it. It all just depends on your situation, what your sentiment is on the stock. But the first thing that I want to mention is that when you're looking to do a covered call, don't necessarily poo-poo the idea of scaling, because that can really add a lot of things to what you're trying to do with your overall investment goals and objectives. Now, the second part of what I'm looking at, let's say that you maybe took profits recently and you're pretty happy with yourself right now because of the fact that you took profits near the top of the market and you're looking to get back in. But you're waiting on a dip. Well, there's a couple of things with which you can do. First thing, of course, would be just to get back in, buy stock or buy calls, whatever you want to look at. Or you could continue to wait for the dip. But the thing that I want to mention today is something to where you can kind of have some fun and maybe do a ratio put spread. So let's say, for example, that maybe you already got out of half of your stock position. XYZ stock was doing great. You had 200 shares of it. You sold 100 of them, or you got called out on them if you're doing covered calls, and you're happy with that. You made your gains, and you're feeling good, and you still have 100 shares to go even higher. But I want to get back in. I'm not quite sure where. Well, one thing you could do is you could sell a put to get back in at a lower level, and then just collect dividend for waiting is what it's called a lot of times. If the put gets put to you, well, you're happy owning the stock anyway. But if it doesn't, well, at least you got paid something. The other thing that you may want to think about is something along the lines of a ratio. So let's say that you got out of XYZ stock at 50, and it's at 45 right now. And you got out of the 100 shares at 50, and you're still holding on to the other shares at 45. And of course, since this is a fantasy, let's assume you bought it at $12 a share, and you're feeling pretty good about yourself right now. but you want to get back into it. The other thing with which you could do is perhaps you could do this ratio put spread. So in other words, let's say the stock's at 45 and you'd be happy owning it at 40. Step 1, sell a 40 put. Step 2, with the premium you collect from selling the 40 put, buy a 45-40 bear put spread. So you're basically being long a put spread. It's not going to cost you anything because you're going to use the premium from the 40 put to finance the cost of the 45-40 put spread. So at the end of the day, you'll be long your stock, but that really doesn't have anything to do with the put spread trade from a standpoint of risk. But you'll be short 2 40 calls and long 1 45 call. Or I'm sorry, I meant to say puts. Short 2 40 puts, long 1 45 put. And what that does is if you're able to do that for even money, meaning that the premium you collect from the 2 40 puts finances the cost of the 45 put, then you're in kind of a unique position. Not only will you be paid to get into that stock, but you'll be paid $5 to get into that stock if you indeed get it put to you. Meaning that if the stock does go down, you will have $5 of essentially free money from the profits from the 45-40 put spread. And if the stock gets put to you, then you're essentially buying the stock at 35. So in other words, what this does is this is just another unique way with which you can get it back into things that you got out of and not necessarily play the downside of the market, but you have a way with which to kind of customize what you want to do. See, folks, the beauty of options is that the stock traders, you buy or you sell. You're like, I wish I could get in at this price. It's not quite doing that, but then I got all this dead money. All the answers to the problems of a stock trader can be found with options. Now, of course, you have to be right, but that's minor details, of course. I'm saying that jokingly. But with that, you have a lot of choices when you have options. And that's the fun of this whole business of trading options that I love, and it still excites me almost 20 years into it. So you have choices, and ultimately the thing that I like to do is just ask myself, what do I want to do? What would I like to do with this? And how much do I want to risk, and what do I feel comfortable with? And you can be very creative, and that's what the option product gives you. Now, getting back to that ratio put spread, of course, if the stock goes higher, then you will get nothing and have to like it. Well, you may not have to like it, but you will get nothing out of it. But the options will expire worthless, and you can live to trade another day. So that's where you'd make the decision, would I have been better off just selling the put or doing this ratio spread? Food for thought, and I hope you enjoy thinking about it, because I know that I do every time I get into a situation like this.
There you go. Options give you options, listeners. I like it. As we keep on rolling to our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, I touched on it at the top of the show, but we are indeed in the teeth of earnings season. A lot of names popping off this week, and indeed today, before the bell today, we had Halliburton, SAP. After the bell, we got Ameritrade, Del Taco, Logitech. So you like tacos, you like finances, maybe you like PC peripherals. They got you covered here today. Rest of this week, also pretty hot and heavy. Tomorrow, we got McDonald's, Snap, Chipotle, Skechers, even Six Flags out there. With Wednesday, Microsoft, Tesla, eBay, PayPal, Boeing. Our pals across the street again. Probably not going to be a good one. I guess we'll find out. Thursday, got Amazon and Twitter and Intel, as well as Southwest, Nokia, Raytheon, a bunch. Friday, you got Verizon and a bunch of other names out there. So it's just a crazy hot and heavy week here. We're right back in it, listeners. If you are indeed intrigued, I know a lot of you are, head on over to theoptionsinsider.com. Click on that top right corner of the homepage, that tab, Options, News, and Articles. That's where you'll find our Earnings Move and Earnings Move Results Reports, brought to you by our friends over there in the land of ORATs. It's great data, and it's all completely free. So take advantage of it until they come to their senses. They profiled legions of names when they're reporting what the market's predicting in terms of straddles and volatility, what they've delivered in the past, all sorts of good stuff, including how some perform after their announcement, like some names popping off today, like Halliburton. They were pricing in, they went into their reports at about $18.50. They were pricing in a pretty paltry straddle of about a little bit north of 0.5%, 0.6% in terms of percentage moves now. They were expecting a 0.6% move, and they actually delivered. They outperformed it quite a bit, nearly 5% is what they ended up moving. Right now, Halliburton is up nearly 7%, up about $1.30 to trading nearly $20. So they've outperformed their straddle by about 7.5 times. So big moves out there in Halliburton. That's just one of the names. There are legions of names being profiled here. I encourage you listeners, if you have names upcoming, or maybe names that are reporting right now, you want to parse them, you want to see McDonald's, what they're pricing in. McDonald's was at 208.30 going into their last report. They were pricing in $1.60 or so. In the past, though, they've moved $5.60. So a fairly light straddle compared to recent history. You want the 30-day implied, historical, 90-day, all that good stuff. It's all there in the earnings move and earnings move results reports. All right, let's go around the horn, see what everyone else is fixated on here until the next time we can gather here together on the show on Thursday. Let's start in the land of Krypton. Mr. Trey, sir, what is on your radar for the rest of this week until we get back together here on the show on Thursday?
Yeah, same. Earnings. There was a couple that kind of stuck out to me, just kind of interesting points on the chart that I definitely want to be paying attention to. A couple of the names that you mentioned already, but Chipotle coming up tomorrow. If you're looking at the chart, I mean, this has just had such a huge uptrend coming into August, but it has just been right around this 850 level. It's just failed to break through throughout August, September, pulled back, touched this 850 level again end of September. A couple more times, been bouncing around this the last few days. So again, sitting right at this high point. So curious to see what happens with earnings. The at the money straddles priced in a little over right about $57 here right now. Right, is it enough to finally push it through this point or not? It would be an interesting one to see. Always interesting to see earnings. Can be a catalyst for some of these breakouts or reversal points. So just sitting right in an interesting one. Of course, the other one that you mentioned here that was also kind of an interesting chart point here as well was Tesla. Always an interesting company here. I know things have changed over the last few months. Back in June was as low as around that 170 point bounce back. Here, pulled back after earnings, but here recently, it's caught a little bit of an uptrend, here through October, and managed to just break above that 200-day moving average. But after breaking above it, kind of hovered back down and sitting right at that 200-day. That 200-day has been kind of gently sloping downward, right, indicating that longer-term downward trend. So, I'll be watching in earnings to see, what happens there, right? Is there enough momentum? Is there positive news to help it above this level to help reverse the long-term trend? Or if not, push it back down into that recent range here. Option market was looking at about a $21.50 move based on the at the money straddle price here. So certainly, enough to get some movement around that average. So, those were two that kind of caught my eye. I'll be keeping an eye on. Just always like to look at things from that chart perspective here as well, and we'll certainly check back on those later in the week.
Thank you for that, sir. Let's go back to the land of the lobster, Mr. Rock Lobster, sir. A lot on the radar here from a vol perspective. What is on your radar for the rest of the week?
I'd like to see if vol just kind of hangs here because October 31st is the next Brexit thing. It is hard to believe our vol is going to really stay elevated for that. We had the huge rally last week, kind of a vol crusher. And remember, the zone of the monk has still not really. It has still, zone one has not appeared yet, so we're not in that bottom quartile of volatility yet. And we have some economic data this week, but it's a week like when earnings are coming out, if they're pretty good, should be a soft volatility week. And as of right now, I'm going to say it's just kind of flattish. So all I would say is a lot of conflicting currents right now. No real trend that I could discern as of yet.
Conflicting currents indeed. A man who's never conflicted, though, is Uncle Mike. Uncle Mike, sir, what is on your radar for the rest of the week, sir?
3,000, in addition to what was already mentioned, and not a lot to add to it. Just watching the 3,000 mark to see if we can get above it or if we go below it significantly within the S&P 500. Big number. We've been stuck on it for a while. See if we can break the glue either to the upside or the downside.
That music, though, means unfortunately we've run out of time to see if we can hit that 3,000. We'll have to wait until Thursday's show listeners. Of course, a lot hitting the network between now and then. Keep you entertained, so stay glued, including the Crypto Rundown coming at you a little bit later time today. Going to be at 3 p.m. Central, 4 p.m. Eastern. We have so many guests coming in from international waters listeners that sometimes we have to adjust the time, especially on crypto. So much of it in the Asian and Australian region. Making it a little bit later is just the only way they could even come on. Otherwise, it's 2 in the morning for them. So we push it back a little bit. So we'll be coming at you today, 3 p.m. Central, 4 p.m. Eastern, to talk all things crypto, derivatives, and spot and futures and all that craziness. So stay tuned for that, as well as a lot of other cool stuff hitting the network until we can get back here together on Thursday. And in between now and then, a lot of fun stuff to be found on my individual panelists' various offerings. Let's go back to the way we came. Uncle Mike, sir, if folks are intrigued, maybe they want to reach out to you to talk more about this scaling thing. Where should they go? What should they do?
stcharleswealth.com to find my information, my email, my phone number, and all that fun stuff. Would love to have a conversation with you. Year end is coming, and also people have to make decisions about should they take gains on their capital gains this year or next year for certain stocks. Call me. I'm happy to give you an option trader's point of view on such a topic.
There you go. stcharleswealth.com is the place to reach out to the man. Click on the fox for fun and prizes. I'm just kidding. It doesn't do anything. But one day when you go there, it will at least make a noise, as Uncle Mike will tip a cap to me in that regard. All right, and Mr. Rock Lobster, folks, head on over to optionpit.com. Maybe they want to talk more about this fund like Zone of the Monk. You want to text people intraday to let them know what's going on in the world of volatility. Where should they go? What should they do?
Yep, go to optionpit.com, sign up for my vol newsletter. If you said you came from the show, I will even give you the first month for $17. Just for trying it out. We've had a good little run this year, so people are happy. So happy students means happy newsletter writing.
Yeah, head on over there, optionpit.com. The newsletter subscribers have already paid for many years worth of the subscription just in the last month or two alone, listeners. So get on over there. You can talk Zone of the Monk, all that other good stuff with the Rock Lobster. $17. It's a couple of Starbuckses. optionpit.com. You can also sign up for that silver course where they will text you throughout the day. So if you hadn't had enough of the Rock Lobster and the Meatball on the show or on Ball Views on Friday, you want more in your life, optionpit.com is the place to go. And last but not least, Mr. Trey, if our listeners, they want you or maybe The Last Emperor or maybe they want the Song of Ice and Fire, all the rest of the crew, if they want you guys in their lives on a regular basis, where should they go? What should they do?
Yeah, head on over to fidelity.com/options. Great place to learn about a little bit more about our option platform, classes that we run, updates to our commission schedule. You can always call Fidelity 877-907-4429. Feel free to ask for myself, Colin, Constantine, or another member of our strategy desk team. Always happy to dive further into your strategy and have those discussions with you as well.
There you go, folks. Fidelity.com/options is the place to begin your journey over there. I've been hearing anecdotally from some listeners that they're kicking the tires over there. So you can join the party. Fidelity.com/options is the place to go. They're on that free commission bandwagon now like a lot of the other ones are, but you also get the options tools we talked about here on the show. You get to call up guys like the Last Data Krypton and ask them questions. Head on over. Fidelity.com/options is the place to go. And on behalf of the Last Dad of Krypton and the Rock Lobster and Uncle Mike and indeed myself, I want to thank all of you out there for downloading, for streaming, for subscribing, for sending in all those great, juicy, crazy questions. We'll get to those on the mail block on Thursday. Don't you worry. And we'll see you back here later on today, 3 p.m. Central. So take a nice little break, have a lunch. I'm going to sneak over to Boeing headquarters, see if I could sniff out some interesting scuttlebutt going on over there, and I'll be back at exactly 3 p.m. to talk some crypto, some vol, some term structure, some skew, all that good stuff going on the crypto side. And we'll be back here tomorrow with more interviews and all sorts of fun stuff, and Wednesday for OPR. And then Thursday, we do it all again here with the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.